Hi, I'm Rick Kaler. Thanks for joining me. War with Iran is adding a new level of chaos to already uncertain times. What about your retirement savings? Is your investment portfolio safe? Is it time to think about pulling out of the stock market? If you're asking yourself questions like these, please pause and take a few deep breaths. Then put the phone down before you call your investment advisor, or back away from your computer before you access your investment account. This is not the time to take dramatic action out of panic. Now, some pundits are already making comparisons to the 2003 invasion of Iraq by the U.S. or Russia's special military operation attack on Ukraine in 2022. They're suggesting that the current war, like those conflicts, could last for years rather than weeks or months. That comparison adds weight to the uncertainty of the moment. When we hear not only that we're at war, but that we may be at war for a long time, anxiety is a natural reaction. A proactive voice inside you may be saying, well, get out now while you have something left. It may urge you to move your investments to cash and wait for certainty. There's another voice that may urge you to ignore the news entirely, saying, markets always recover, don't worry about it. Now, both of these reactions are normal. Both voices are trying to keep you safe. One sees safety as holding on to what you have by stashing your assets in the bank. The other sees safety as shutting down your anxiety and even pretending everything will be okay. Both reactions are really normal, but it's not optimum if either extreme controls your financial decisions. Economic markets react quickly to new risk, but they don't run by fear alone. They focus on long-term economic output. If factories stay open, trade continues, and companies keep earning profits, markets adjust and move forward. Think back to the Iraq War. Markets moved sharply at times. Oil prices spiked. We're seeing that. There were times of deep uncertainty. Yet over the full span of that conflict, the U.S. economy continued to grow. Businesses continued to operate. Long-term investors who stayed disciplined were not destroyed. There's another factor in this moment, which is unpredictability. The Trump administration has shown that tone and policy can change quickly. That back and forth feel, or that back and forth can feel like instability. The markets have largely learned to live with that pattern. When leadership seems unpredictable, investors build that risk into prices. When clarity improves, prices adjust again. This is not just calm in an emotional sense, but it's adaptation in a financial sense. A strong, diversified financial plan is built with uncertainty in mind. Markets shift. Prices rise and fall. Leaders come and go. Nations will negotiate and have diplomatic sessions, meetings. Alliances will shift, even go to war. These events are not rare interruptions. They are part of history. If your investment strategy only works when the world is stable, it's not a durable strategy. Wartime calls for seriousness and staying informed. Feelings like fear and anger are normal and appropriate responses for anyone concerned about the human suffering and the cost of any war. They might lead to compassionate actions, such as contacting politicians or donating to charities. But these emotions are less helpful when it comes to our finances. Volatility is really uncomfortable. The anxiety around uncertainty can make us want to jump into action. But emotion-driven actions, especially extreme ones like getting out of the market, are likely to cause more damage to your long-term financial health than any external events will. So in chaotic times like these, when we don't know what might happen, acting out of panic is likely to make things worse. The simplest, though certainly not the easiest, investment strategy is to keep breathing and focus on the longer term. Thanks for listening.